Hello, everyone. I'll give it a couple of seconds whilst I let a few more people come in and join the webinar. Thank you so much for joining us. Let me just check that people are coming in. Yep, it looks like we've got a couple of hundred people already filtering in. Wonderful. Great. Well, I'm going to kick it off. And hello, welcome everybody, and thank you so much for joining us for another one of our In Conversation webinars. And it's an ongoing series of talks that are at the core part of what our mission is here at ArtLogic, which is to support the community and really give some valuable insights and hopefully create some really meaningful conversations that reflect some of the evolving challenges and maybe the opportunities that are facing galleries and dealers and artists and collectors today. My name is John Duff, and I'm the Director of Marketing here at ArtLogic, and I'll be your host for today. And I'm thrilled that we'll be diving into one of the most anticipated industry publications, the Art Basel and UBS Art Market Report, the 2025 edition, which was launched earlier this week. Together as a panel, we'll start unpacking what the latest findings mean for your business, maybe exploring some of the trends and share some strategies, hopefully staying ahead in a fast-changing and global art market that we all very much love. And I'm delighted to start introducing our brilliant panel of speakers, Dr. Clare McAndrew, founder of Art Economics and one of the foremost experts in global art market research. Claire has authored the Art Basel and UBS Art Market Report since 2016, which has equipped the industry with critical data and guide strategic decision-making. And as a team here at ArtLogic, we're very delighted to support her in making sure that she gets some more respondents to that for our community and working with her. Next up, Daniel Cassady, senior writer at ArtNews, a very lovely publication, who writes on the business, financial, and behind-the-scenes dynamics of the art world. His writing has appeared in the Washington Post, Forbes, the New York Post, and the Art newspaper. And he brings a very fresh and sharp perspective to every conversation. And Wendy Olsoff, co-founder of P.P.O.W Gallery in New York, one of my favorite spaces to visit when I get to go over to our New York office, and a long-term ArtLogic client. Since 1983, Wendy has championed socially engaged art and helped shape the careers of many groundbreaking artists, establishing herself as a major force in the contemporary art landscape. Very glad that you could all join us today for this very important discussion. To kick us off, Clare McAndrew will be taking us through some of the key findings from the report, particularly those that are most relevant for dealers and published earlier this week. And I am very grateful Clare could join us. She's had a very busy week being in New York. So hopefully she'll be able to take us through.
Thank you very much, John. I'm delighted to get an opportunity to share some of the findings of the report, which we launched kind of in the middle of a pretty chaotic week over in the US, but it was an interesting time. There's been so much uncertainty, I suppose, over the last couple of years. So this week has added a whole new layer of that onto the market again. But I put a few charts together. I'm going to run through. I won't kill you with charts, I promise, but there's a few that we might just run through to show some of the figures. Do you have those, John? Yeah, there we go. That's the big figures that some of you might have seen by now. This is sales over the last few years, and looking at the big numbers, I suppose last year sales fell by 12% to 57.5 billion. And you can see there from the chart, we had a good recovery, a good kind of pull out of the COVID pandemic for a couple of years. We reached quite a high level of 68.1, nearly the highest ever the market's been. But for the last couple of years, then we've seen this decline. And really what's been pulling on the overall aggregate values is the high end of the market. So the high end is what kind of pulled us out of COVID. And it's also what's kind of been dragging for the last couple of years. I'm going to go on to the next one. We cover auction and dealer sales, obviously, in the report, but just looking at more specifically at the dealer section, dealers were down by 6%. So they did a little bit better than auctions, but still it's the second year of decline. And the reason, again, you can see for the aggregate decline in dealer sales is really that high end. So there was a lot of varied performance by different segment. This chart kind of splits up the market by turnover segment. And you can see there, it's the very largest dealers, the 10 million plus dealers that actually had the weakest change in sales year on year. And that's the second year that they've been the weakest. So it's quite a turnaround because it's always usually the higher end of the market that's kind of outperforming the rest, the middle and the lower end. But last year, it was the very smallest dealers, so the sub 250,000 turnover dealers that actually had the highest uplift in sales. But you can see there, not everybody doing badly, but that the high end that pulled it down. And actually, it was interesting that the contemporary market had weaker results than some of the older sectors as well. So it's a very big turnaround in how things usually are. You can see on the next slide, it just shows within segments, there was a lot of varied performance as well. But again, you can see in that 10 million plus segment, it's that big majority, that 64% of dealers that saw a decline in sales that caused the overall drop in sales. So that's really what was going on, I think, in the dealer sector, and what pulled the aggregate values down. One thing that was consistent across nearly all of the dealers that we surveyed, and a lot of the kind of conversations that I had last year, was something on the increase in costs. And that's just on the next slide. We looked at operating costs and how they've changed over the last couple of years. And the majority of businesses at all levels have seen an increase in their operating costs. And if you look at things like payroll and rent, on average, they were up by about 8% last year, which is very high by even other industry standards. And things like IT and digital also up. All the internal operating costs up, and the majority of businesses, or over half of businesses, seeing those costs rise. Some of them stable, but most of them seeing rises in costs over the last year. And what was even more kind of interesting was on the next slide is the external costs. These were the things that really have been, I think, probably the most difficult for dealers to absorb. And that's costs that they don't really have that much control of. You know, packing and shipping, the average increase over the last year was 15%, which is a huge rise in costs. And then travel and art fairs were the next two big ones in terms of increasing costs. So these kind of come into focus. I mean, it's the same. The art world is not the only industry where costs are increasing. But as sales are variable, these things really become a keen focus of dealers over the last year. So the huge issue, I suppose, across the board was profitability rather than sales, dealers focusing on profits. And that's just on the next slide. You can see there was more businesses reporting declining profits last year than there was the year before. 44% of the people we surveyed were less profitable. 25% about the same, and 32% up a little bit. So the gap actually increased. There was less people kind of coasting along the same, a few more doing slightly better, and significantly more doing worse. So and this was consistent across the board, from the smallest dealers to the largest dealers. There was a larger portion less profitable than more profitable. So that was the kind of a key focus coming up in both the more quantitative research we did in the surveys and also in the conversations that I had. The other big thing we look at is how dealers make sales, the different sales channels that dealers use. So just on the next slide, we've got the channels. This is how it looked in 2024. You know, over the pandemic and kind of even before that, this has been kind of evolving. In 2024, making sales in the gallery, in person, we're still the largest segment, 44% of sales being made in galleries, 17% being made online by galleries' internal channels, and about 31% through art fairs, and another kind of 4% through online third-party platforms. And I think what's even more interesting on the next slide is you can see how this has kind of evolved over time. Obviously, the big change was in 2020. You can see the orange part there is art fairs, and you can see how that really shrank quite significantly during COVID, when all the kind of events and things were cancelled. And online really grew. And then art fairs started to come back slowly as they kind of opened up again, and we kind of were all thinking, are things just going to go back to the way they were? But I think we've had a couple of years now of kind of relatively normal post-COVID performance, and you can see that the market definitely isn't going back to the way it was. So you know, the share of fairs was 31% last year, so it's higher than it was in obviously in 2020 or 2021, but it's still below that 42% it was prior to the pandemic. And online now at 21%, still significantly higher than the tiny portion it was of 8% pre-COVID. And importantly there, I think 17% of those online sales are dealers' own internal platforms being used to make sales. And these channels are not just important for sales, they're also important for how galleries will grow and extend their businesses and how they'll kind of reach new audiences in future. And I think, in some of the research, it did come out that in-person interactions are still key. It was the highest voted access point for new buyers was still, gallery walk-ins and art fairs were the two highest. But that's coming in parallel with a much greater share of online sales. So it's interesting to see those two things being equally important. And one positive finding on the next slide that did come up through the research was that dealers and galleries were relatively successful last year in many cases in reaching new buyers. So a positive finding was that 44% of the collectors or buyers that dealers sold to on average were new to their business in 2024, which is a fairly high figure, and 38% of their sales were also new. And you can see there for the smallest galleries, for the sub 250,000 galleries, that was kind of 50-50. And it's a case where, selling to new buyers is obviously what the market needs for long-term growth. It's not always a peg for success for smaller galleries because some of it can be out of necessity, out of not being able to kind of sustain repeat purchases to the same people. But to the extent that at least some of those new buyers were brand new to the market is a positive thing because it's expanding the base of people that the market sells to. And we did see that as well last year, despite the fact that values were down 12%, the number of transactions actually rose by 3%. So you're getting that kind of interesting difference between values and the volume of sales. So there was more sales happening last year, but they were just at significantly lower price levels. And to the extent that some of those at least were to new people, even though the values look slightly depressed, that's a positive thing, that they were possibly lower value sales to new people as well. So the very last thing we asked dealers was there's a huge amount more in the report from artist representation and a lot of other kind of sectoral findings. But one thing we always ask at the end of the surveys is what's their outlook for the future. And optimism was down a little bit on the previous year. So there was about a third of the dealers we surveyed overall expecting sales to go up in 2025. And that was as high as, I think it was like over 60% when we asked them in 2021. So significantly not as optimistic as they were a couple of years back. But again, 47% expected things to be about the same and only 19% expected to decrease. Now that was in December and things have possibly shifted since then. I mean, this was kind of capturing how people felt at a particular point in time. So it's probably shifted and it probably will shift again. I think we're all a little bit in the what will happen next phase still. One thing, given the current kind of climate we're in, one of the biggest challenges that came out in the surveys that dealers faced was political and economic volatility. That, along with costs, rising costs, were some of the biggest challenges they face going forward. So even though there was, some optimism for stability, I think 2025 is going to be another challenging year ahead for the gallery sector.
Thank you so much, Claire, for those insights. As Claire said, there's much more in the report. There's 266 pages, I believe, in total to dive into. So it's great to get a shorter summary. Thank you so much. And I promise to everybody joining us, we won't zero in on just tariffs today. We will talk about wider things, but we will try and keep things topical. And I think to start off, I'm going to go over to Daniel, if okay, and talk about that 12% decline in the overall market, which is a kind of significant slowdown, especially in the high end for that post-COVID boom. Do you see this as a short-term kind of recalibration maybe, or do you think it's a longer-term, much more fundamental shift? And equally, what might that mean for that middle market?
I always think about this as a kind of recalibration because, as Claire said earlier, this higher end of the market is what pulled us out of COVID. But that is, I kind of find that as a false metric, right? The interest rates were so low at that period. You had monster sales coming to auction. People were just wildly excited to spend money that had zero limits and kind of no bad repercussions. If you kind of made a bad choice, you could flip a work for maybe even more because of the state of excitement, especially over contemporary art. So I think that what's happening now is kind of a painful and slow regression to kind of how things were. If you, I mean, I haven't done the arithmetic yet, but if it was possible to just remove that COVID era and the giant sales and the frothiness of the market from the timeline, I think we would still be on a gradual up trajectory.
Yeah. And Wendy, from your perspective, do you think it is more of a recalibration, or that it's just something that's going to continue now?
And piggybacking on what Daniel said, I think everyone knew in the post-COVID, if you call it that, because I think we're still in COVID, sort of post-COVID world, that it was insane, that what was going on in terms of rehanging booths at fairs constantly, selling 2-for-1 to collectors, selling out booths before you even get to the fair on previews. It was frothy and fun, but everyone knew it was really toxic. So I don't think it really should come to surprise to the dealers or the auction houses right now where we are, because I think it was predictable. Of course, we have another layer on now, but I do think this happens cyclically. So for example, in other downturns, everyone before the downturn had a frothy, crazy period, although very different because now we have other like AI and collaborations with fashion and all sorts of things that are very different, and online sales. But like in other periods when there were other extreme downturns, there was a recalibration, but then it went back up to crazy again. So I don't know how long this will last. And I hope there'll be this time a lesson learned about expansion and frivolity and insanity, and look back to art and not so much to selling and extreme expansion and production. However, that's sort of what I think it will come back. I just don't know when.
Yeah. And I guess having gone through it now, what do you think lessons could be learned that could stop it going back through that kind of frothy?
Well, human behavior is not very good at learning lessons, unfortunately. And I myself, saw that here too. So I'm not putting myself on a pedestal, but I think looking at the moment now without panic, I think that what's going on is we're in a panic situation. There was instability, and now since January 20th, the whole country is in a state of unbelievable panic. And it's very unhealthy, where you have toxic equals toxic. So panic equals panic, where I think if we could just like slow down and look at some of these figures and look at the positives and look at art again, because art itself, when you go to shows and you look at what potential art is being made, and you have collectors wanting to see things in person, and women artists selling more, and the opportunity to have an escape from the news cycles, from the reality that's been constructed for us, we could look at art. And historically, that's been, in times of crisis, really important. And it's here for, the galleries are offering it. The art fairs, to a sense, are open to everyone. There's extreme one-to-one contact and open for conversation. So I hope people, collectors, viewers, press, can really dive into all the good things that are there and not focus, like I think people want us to focus on panic and get likes and look at headlines and go nuts. I hope people can pull back a little bit.
Yeah, it's difficult in the human psyche to pull back and kind of say, okay, let's calm, let's try and do what we do best and get through it. I think that perfectly leads on to the next question I had, which is about the contemporary sales, especially new works, had a sharper decline, probably the lowest it's been for 6 years. How is it kind of changing the types of inventory that dealers are going to focus on maybe in the coming months, and how is it changing how you maybe work with artists and what kind of inventory you're going to maybe source for upcoming programs?
I don't know that we're going to change our program. I mean, our program really hasn't changed for 41 years, and which in a way is lucky for us because we weren't really chasing trends. I think what we will change is our cost, looking back at what Claire said, really modifying, really looking hard at the art fairs and seeing which ones were profitable, not bringing inventory, not doing crazy dinners, bringing essential staff, bringing art that we think, we integrated, try to find a balance between art that will pay the bills and art that we want to introduce. And we're not going to, look at hot selling artists at smaller galleries and then bring them to our gallery so we can it's very short-term thinking, because you can see exactly what happens, and you can see what happens in the last 3 years to, like, in the auctions where they took young selling artists and then blasted them out there at unbelievable costs and completely damaged their career now. So it's a really bad model. And again, it's just pulling back to like what's healthy.
Yeah, I love that kind of don't be swayed by trends and maybe manage the costs as best as you can just to kind of get through the next period is such a good takeaway. And I might move over to yourself, Claire, looking at the smaller galleries with under kind of 250,000 turnover, where they saw that increase of 17%. With the blue chip dealers experienced 9% drop. What's your take on where that divergence has really kind of started to pair off?
It's such an interesting thing for me as just a kind of a more objective observer of the market, because it's different from trends we've seen in the past where the smaller galleries are struggling more. I mean, one thing I would have to kind of caution is that we do in the report as well, we did ask how people fared from 2019 to the present. And there still is a much higher share of larger galleries that have recovered or stabilized their sales than that smaller segment of galleries. So some of the positive, kind of extra positive performance we've seen in the very small galleries over the last couple of years has been about continuing recovery rather than it being a kind of a boom for smaller galleries per se. But that aside, it is a positive development. And I think, even in the auction data where we have that very good kind of micro level transaction by transaction data, you can see the segments that grew the most last year. Actually, the only segment that grew by value last year was the sub $5,000 segment at auction. So there is something going on there that they're either new people or they're people buying at lower prices, which is a positive thing. It means it's a little bit more about people buying what they want. And to Wendy's point, it's a little bit more about, buying for the art itself at whatever level. I mean, what drives a lot of this kind of crazy up in the market is often quite speculative stuff and people doing kind of more investive type buying. So that shakes out when things get uncertain and times get tough. That kind of shakes out of the market, and that's why we see some declines. And we've seen that before. I mean, after each kind of boom and recession, the market comes out slightly differently. So we don't see exactly the same pattern and regionally and things like that. But it is often a similar thing. You can see that kind of the market starts doing well, more people get involved, including people that are quite speculative. And we saw that in 2021, especially when with the rise of NFTs and all the crypto kind of money that was coming in as well. So all those things feed in, and then when people realize that everything doesn't keep going up, you get that kind of shakeout and things go down again. So it is, as Wendy said, it's kind of a cyclical thing. Not to say that the same thing happens again and again, and it comes out differently. And I think we're seeing the structure of the market look quite different than it was before, particularly when I break it down into those channels and things like that. I think that's a fascinating change, and it means people are looking at how they sell and how they buy differently.
And I bet we're all very happy we're not having a large section on NFTs to discuss right now. Daniel, I might pivot over to yourself if that's okay, because you just had a piece out this week in ArtNews about the report where, and I don't want to put you on the spot, but you wrote the kind of this fork could upend traditional power structures between smaller and larger galleries. Could you maybe unpack a little bit by what you were kind of talking there, and whether or not you think this is likely to stick around for a bit longer?
That really had to do with, the top end of the market, the sales there diminishing and lower sales kind of going on, having an uptick. And that again relates back to what Wendy was saying. My sense is that the galleries that are doing the most successful kind of aren't chasing trends, and they're reaching for buyers kind of across price points. If you're the kind of gallery who is banking on making seven-figure sales to pay your rent and pay your bills, two of those go south and you're underwater for the rest of the year. It doesn't matter how many fairs you go to. So I really think that, while the smaller galleries are having more of a hard time now because of how difficult things are financially when it comes to shipping or attending these big fairs, or even the costs of managing a staff, which by nature at a smaller or mid-tier gallery is relatively small. These are the galleries that, if they can stay the course and manage money correctly, which is not why people get into the art world, to manage their money correctly and take economics courses or banking courses, but that ultimately it's a business. And the galleries that are the most successful, or to me that will be the most successful this year and next year and the following year, are the ones that aren't trying to artificially brand themselves in some way. They have a curatorial vision and they stick to it, and they are looking for a collector base that is very broad and wide at the bottom and narrows at the top. Yes, everyone would like, a $500,000 sale at at a fair. But like we were talking about earlier, those sub $5,000 sales at auction, that's small now, but over time a portion of those people will build into hopefully a collector base that can sustain, and help grow a smaller gallery. I was thinking about another part of that is, I thought it was very interesting in the report how public auctions dropped 25%, but private sales have been growing 14%, I believe. The nature of private sales is a very personal thing. They take months at an auction house. A collector will approach with saying, I want something kind of like this. What can you find? And then that specialist oftentimes flies all over the world looking for something, right? I think dealers would benefit by thinking about things in that way, in that kind of long game way. We're all scrambling to figure out exactly what the world looks like right now, but it would behoove everyone, I think, to keep in mind that the world actually does move very slowly. Relationships are built very slowly, and good relationships even more so. But it's those long-term relationships that will, as long as you keep your curatorial vision, honest to yourself, it's those long-term relationships that will keep people coming back, that will spread by word of mouth, and help galleries kind of grow in the long run. Those smaller and mid-tier galleries kind of lift them up.
Yeah, I think it's very interesting what you're saying about also the current situation, because I know with the backdrop of kind of changing regulations and tariffs, and we're going into kind of spring art fair season in New York, and everybody's having to they've got costs that are rising. What is it in your current conversation you've had with dealers about the costs that they're facing and that trade-off that everybody's having to make at the moment? And I guess everything's changing so quickly, so how do you stay on top of it in terms of what might be coming?
Yeah, that's the question. Right before this started, I wanted to look up how long ago it was that Trump put the 90-day pause on tariffs, because it felt like it was a week ago, but it was actually 2 days ago. Time does not move in a reasonable way when the government is changing that fast and when regulations are changing that fast. I would be hesitant to give anybody advice on this. I mean, I have trouble balancing my own checkbook, but from the outside, the obvious advice would be move slowly and move with caution, and make sure, like Wendy said, make sure that you're spending responsibly in a way that can help you grow, right? Like, you don't need to have a 50-person dinner. I'm sure that's why they're very fun. A lot of people got into the art world for that part, and not for the let's be a responsible dealer part. But oftentimes a 5-person dinner is just as good if you're trying to reach, 2 dealers, right? Like, and that affords you that face-to-face kind of relationship building that I was talking about before. Whereas, sure, the 50-person dinner looks great when you're there, but maybe it's diminishing returns when you're spending that much money for not a guaranteed outcome.
Yeah, and I guess for yourself, Wendy, what advice would you give to gallerists kind of thinking about what's coming up for the next year? Where should they be placing their kind of priorities, or how do they kind of manage their resources, costs? What advice would you give coming up? Or I might have to unmute, if you could unmute. Sorry.
Don't know who's in control of this computer sometimes. Just to respond to the tariff issue that's come up constantly, it's not, I just want to put it out there. There's a lot other issues sending us into panic right now, you know, in terms of women's rights, in terms of immigration, in terms of our cultural capital being, you know, corralled and diminished. There's so many things sending us into panic. So you have the tariff thing that everyone's focused on. And then underneath that, there's layers and layers of deep other panics. So again, I'm just saying, like, go back to the art, go back to what you do best, nurture relationships, cut down your costs. You know, you don't have to bring extra, like we're doing Basel, like we're bringing very beautiful, very specific things that balance our program in many ways without building a giant closet with tons of stuff in it or having it rehung 10 times. Like, we're really going back to basics and having to say no a lot. And it's not fun. You know, not having a dinner is not fun. Not saying, yes, I'll frame everything and paint the gallery purple and green and then repaint it because it make the show more exciting. You just have to say no to artists, which no dealer ever wants to do. But I think if everyone like refocuses on art and good conversations and colleagues work together, I think good colleagues working with good colleagues at all levels of the art world are more important than ever right now. So I think dealers need to speak to each other. I think that's really important.
I really like, just to hop on something Wendy said, you've mentioned a couple of times the word panic, and that's exactly, I think, how it feels. I mean, at least as a journalist covering the art market and the art world in general, and I know for a fact, you know, dealers that I speak to as well, panic is the great way to describe the world, you know, financially and politically right now. Something that I always think about is, if I can, regardless of whether I'm feeling that kind of panic, if I can help calm someone down by removing myself a little from the situation, that does good across the board, right? Like, Wendy, you know, is such a leader in that community. And by even just saying that, I think, you know, hopefully it would inspire someone else to step back and take a breath before letting that panic kind of overwhelm, one, all your senses, but also your decision-making process when it comes to how many fairs you should do or how many shows you should put on. The rules that the art world was following for the last decade don't particularly apply now. And there's no reason that they should, right? Every gallery and art dealer should figure out a way that works, that their business works for them.
Yeah. I now want to start a WhatsApp group or a newsletter that every week reminds people to take a breath and to focus on.
Yeah, we all need those the World War II keep calm and carry on signs. I think about that constantly under the pressure of deadline. I'm like, the more you hyperventilate, the less you're going to get things done. Just take a breath, have a cup of tea, and then try to get some work done, you know, without freaking out.
Go look at art. It's very calming.
Exactly. And we're in the perfect place for it. You know, 30 minutes at a gallery is time really well spent, especially when you're, you know, overwhelmed by everything.
I think that's a perfect segue into my next kind of point that we were going to discuss, which is the physical gallery space. That seems to largely remain stable in the report as a kind of sales channel. But the own dealers are continuing to outperform maybe those third-party sites, marketplaces like Artsy, for instance. Wendy, for yourself, what do you think this says about galleries and maybe their digital strategy and what they could be focusing on in 2025?
It's something I think in the report that sort of made me think, like, what maybe we could do differently, because I'm not really an advocate of buying art online. And I think during COVID, people did that and they regretted it and now are not buying. So I don't think it's a great way, but I think it is a good way maybe to get new buyers who are born with the computer, the phone in their hand, and they're used to buying things online. So you don't want to miss that opportunity at all. And I know like Platform, for example, that was started during COVID, probably is really successful right now because it's bringing in that huge audience. But then, you know, contrary to that, you have people who want to see things in person. Like we just went to Hong Kong and we had quite a few clients say, can you just hold it for me? I want to see it in person, which was not common in the last, you know, 2022, 23. And it's like, of course you can. And that's what I really like. And a lot of art looks really bad online, and a lot of bad art looks good online. And a lot of good art looks terrible online. And I think people should remember that if something looks really good online, you better look at it in person. Yeah. And sometimes some art, the most important art in the world, I would venture, probably does not look so good online. So I have a lot of questions about it and how I'll respond to it, but you can't ignore it.
I think, but it's interesting what you're saying about maybe just using it also as a channel to get people to see this art in person.
Start a conversation. Yeah.
Yeah. It's kind of start that conversation, make sure, you know, if they're discovering something on Instagram, you want to make sure they can check it on your site and then come in and see it. Daniel, I don't know if you have an opinion on kind of the third-party online space that you want to talk about the relation.
You know, I see the point of this kind of third-party online space, but what I'm really interested in is the galleries that have a social media presence that's like analogous to that curatorial vision is what I keep getting back to, right? Like the galleries that I find most successful are, you can, even if you didn't know the artist, you could tell which gallery it was roughly by the artists that they're showing. So that digital voice on Instagram or on Twitter or Blue Sky, whichever flavor you prefer, is really a storytelling extension of whatever your program is, and should be seen that way. It's when it's done correctly, I think it's speaks in the same way a show speaks. So if you're just like arbitrarily posting, you know, a picture of something, sure, you might get some clicks, but what I think you really want to do is inform people, especially if you're looking for new buyers. You want to kind of educate, you want to give people a narrative to chew on that keeps them interested. And I think, yeah, that could lead to sales over Instagram. I don't think that's ever going to leave, but like Wendy said, the best version of that, like the candid version of that, is you get someone to message you on Instagram and say, oh my God, what is this piece, or who is this by? And then figure out a way to make that into a face-to-face meeting, or come to this opening. We have cheap beer. You know, to really educate and draw people in with the narrative, kind of telling people about making social media like a version of a walkthrough of the gallery in small digestible bites.
I think yourself, Claire, obviously you've gathered these stats over the last couple of years. What's your kind of take on this kind of shift in where people are placing or getting sales from, in terms of kind of third party, the current websites? How have you kind of seen that data change over the last couple of years?
I think the kind of internal platforms that dealers are using that's been a fascinating kind of growth area, and it grew because it was very behind before, I think, as well. So there was a kind of a big boost up, obviously during the pandemic and stuff. But I think, you know, it's pretty clear now that you have to kind of go on in fire on all cylinders. You can't kind of do one to the neglect of the other, and I think that's what's making it a more challenging profession, I'm sure, because you kind of need people that are in your gallery who are they're usually kind of staffed by a very small number of people, but that are specialized in a variety of things. It's not something you can kind of outsource very well, but you need there's dealers are operating on all levels, and there's nothing that you can really neglect. It keeps coming through that in-person interactions are critical, but both for getting new buyers and also for sustaining relationships, over time. Even if somebody's not buying something, it's meeting somebody at the gallery or at a fair or something that's really important as well. So you can't kind of do one to the neglect of others. And I think from the collectors research we do as well, I think collectors do like to be able to do some research online, whether it's they don't sound so stupid when they walk into a booth or a gallery, so they know a little bit, they've got something in the holster to kind of to talk about. Both channels are kind of going ahead. And I think we did think for a while, I mean, it was a big question whether it was just a knee-jerk reaction to the pandemic, this kind of boost in online sales. But I think now, even though it hasn't been completely normal, there is a couple of years there where things could have gone back if they were going to go back. I do think this pattern that I've kind of seemed to have observed over the last couple of years is a pretty stable one. I mean, we'll see changes, but I do think that share of online versus offline has got a little bit more stable.
It's interesting what you're saying about having to grow almost each slice of that pie. Dealers aren't getting 25, 26 hours in a day. People are still having to do more with every kind of hour that you've got and grow each little part. And that takes a lot of resource from the team to be ever more divergent in kind of all the different skills that are required. So I think I'm very conscious of time. And we did say it would be about a 45-minute discussion. So I'll start moving on to some of the closing questions, but I know what this question will be from Wendy's perspective. It's kind of around the current perspective on the market, hold true. But with that kind of maybe optimism down, what is it that you're hearing from peers, and kind of what would be your overriding advice would you give to them for the next 12 months? Oh, I just need to unmute you.
Oh, no.
Great.
Can you see me?
Yes.
Yeah. So, my advice is it's sort of like just a really like hard moment, but I think to dig deep into yourself and recognize it's going to be tough. And that if you're going to be an art dealer or an artist right now in this market, it's going to take perseverance, and it's not going to be fun. And it's not a great time, but from these times, good things will come. Learning experiences, it's opportunities. There's potential to look back on this time and say, can you believe that happened, but this also happened? So hopefully there'll be some lessons learned. So when the economy recovers, we don't repeat history, which is the human tendency to do.
Excellent advice. And from Daniel yourself, what is the kind of shift that you're seeing in collector behavior, maybe on the broader market pressures that are coming in? And we touched on this moment for, is it recalibration? Is it evolution? Which way do you think it will go?
It looks to me like, and again, this goes back to something that Wendy said, there's this kind of cyclical move that's perpetual in politics and in markets and in artistic trends and in what's published in novels. People now, I think, are more value driven. They're looking less at like what's hot and what's exciting, what my neighbor bought, and being more influenced in what actually kind of turns them on. The only way to find that out, and I know I keep harping on this, is to engage the people that you are hoping to sell to and try to engage more people. I don't think that part is going to, I think that part's going to only grow. I don't think that's going to go away. Even if the market does become more speculative and frothy down the road, we're getting to a point where the younger collectors now will become the major collectors in the next few years. And so it's really an art dealer's job to kind of instill in those people the right way of thinking about the art that they like, or about what's worth X amount of money. I think if with that education, that will kind of help the market kind of contract to its natural, proper state, but also it'll help fight against a weird speculative swing that we saw, like again during COVID, and we're not even out of it because we're still seeing these market effects now are kind of directly related to that, like freewheeling low interest rate COVID era. But as these newer collectors kind of are educated and learn to buy art because they appreciate it regardless of the price point, I think as they gain in wealth, you know, the art market will rise with them. That's the hope, anyways.
Oh, Wendy, I just need to unmute. Oh, I think you're still on mute.
I'm not muting myself, but I think that piggybacking on what Daniel said and telescoping this a bit to collectors and new collectors, it's a very good time to come into galleries and talk to dealers. The artists would come in and talk to the collectors. The dealers are in a moment right now where they have the time and the value to them to educate you. Before, in 2021, 22, the hectic frenzy made it almost impossible for a new collector to get in the door. And it's like right now, great opportunity for people to talk to collectors, make deals, see what opportunities there are. And I think people can buy art in all sorts of ways, even though they can't borrow as much. Galleries offer very good payment plans. I mean, I don't think I'm giving away secret information here. That's interest free. I mean, there's ways of buying art and learning right now that probably won't exist down the road again. And you can get in now and make friends and know who's good and find out who you respect and what you love. It's a good time in that way.
Do you think those couple of years maybe put a few people off getting into collecting?
100%. A few people, a lot of people, a lot of people.
And what do you think? Do you think it's just now? How do you think we find those collectors again? Do you think they'd put off for a very long time? Or
a lot of those people are trying to sell work they bought during that period. I'm sure the galleries are getting calls from them all the time, and auction houses too, and they can't do anything with the material because it was overpriced and the collectors never saw it in person, and now they're looking around their living rooms or storage units and thinking, oh, can I even get what I paid for this? And not to say in the future they won't get more, yeah. But those collectors are burned right now. Yeah. And again, everyone participated in this.
Collective responsibility, the point.
I mean, it was a crazy time after COVID, and COVID was, you know, unusual thing to live through, and you know, it was a frenzy afterwards.
Yeah. And I guess over to yourself, Claire. Obviously, using data like this, how do you think galleries can maybe apply this data to kind of make some strategies in the coming year to maybe navigate some of the, you know, rising costs or challenges that are coming?
I think it's difficult to sometimes make a strategy from these big figures, but it does give a sense of the kind of cycles that we go through. And I mean, I think some of the benchmarks for the industry are interesting. You know, if your costs didn't go up as much, what are you doing right? If they went up more, what are we doing wrong? You know, it's kind of more benchmarking rather than, you know, finding specific things to do. But I think I think it's a time at the moment. I mean, I don't know about you guys, but I have just been reading every single piece of information I can find over the last kind of week or so. It's a time where people really value information. So I mean, I know you stay up all night if you're kind of reading everything at the moment, but it's you know, just to kind of be aware of things that are going on, and that the cycles that we're going through have happened before. You know, I always love to talk to some kind of older colleagues in the gallery sector that have been around since the 60s and stuff, and have seen things like that before, and they say we've been through worse than this, you know. So it's good to see that you know, the market does cycle through these things, and to bear that in mind. But I think that the best way to use the report is really for benchmarking, and even if it's not the same as what you're doing, figuring out what you might be doing better than the market, or not as well, and not to change that, but just to figure out why, and if there's a reason why that needs some alteration, using it for that, maybe.
So I'm conscious of time, so I'll do the final question. If we were to fast forward to next year, and Claire is producing the 16th report, I believe it will be, that will be published. And we're having this conversation again. Wendy, what do you think would be the most significant change that's happened in the last 12 months, or those 12 months?
I think the most significant change will be an adaptation to the market. In other words, maybe a few less art fairs, fewer shows, more introspective exhibitions, more, I think, collaboration between galleries, I think is important. And I think more galleries maybe who are unique in cities sharing spaces. I think that hopefully we'll see more people coming in and feeling more relaxed and buying art in this market. It's completely unpredictable to me where the economy will be in a year. I'm not an economist. I can't predict that.
I don't think anybody would like to try and predict. Nobody wants that job. And Daniel, for yourself, what do you think this conversation would be if we were having it in 12 months' time?
I mean, I'm definitely not clairvoyant. I would be much more wealthy if I were, but I would like to hope that in a year's time, people will be a little more optimistic. There was a really interesting, one of the most interesting things I think in this report was that like a third of dealers said they're going to do really well, or at least decently well in 2025, when that same dealer said their colleagues or competitors wouldn't do as well. That's this like slightly optimistic but diluted way of thinking that I think is really important, right? The point of getting into any artistic practice and dealing art is probably just as artistic as making music or writing or making art itself. It's a creative business that you get into, but you get into it with the belief or the hope that you can succeed where other people can't. And if everybody remains that positive, that's how you find workarounds to difficult situations like we're in now. The way Wendy said, maybe it's more collaboration, maybe it's rethinking how many fairs you do. I've spoken to multiple dealers who, over the last 2 years, only did 1 or 2 fairs and have seen their business grow. And so they're being very judicious, like maybe LA 1 year and maybe New York another year, or maybe 1 US fair and 1 European fair, and switch it up. There's just a lot of different ways of thinking about how to make a gallery work that I think people are going to, by necessity, explore now and over the next, couple of years. Much in the same way that, just to touch on the tariff thing again, the world and European countries and Latin American countries are going to have to learn now how to deal and trade without the US being in the middle of everything. And that might be beneficial in the long run for like overall global health. It will be very sticky, a sticky path to get there. But in the same way, galleries are going to be forced, especially right now, to rethink what their priorities are and how to best accomplish what they want to accomplish. And overall, that I think should be a good thing.
And Claire, for yourself, I don't want you to try and preempt what's going to be in the report, but what do you think this conversation will be largely shaped around?
The thing I'm most interested, I don't know exactly how it will play out, but to see that global distribution, if that shifts a little bit. I mean, there was already a tiny 1% shift away from the big 3 sales markets. I know that seems very small, but there's other parts of the world that are kind of developing now in terms of the value of sales. So I'd be very interested to see my pie next year, my pie chart of where sales are taking place. And the US has got such a large margin; it has a lot of kind of room to kind of maneuver there. But just to see, do the markets become a little bit more domestic, or regional? Those international trade patterns I'm going to be focused on.
Right.
I think that's what saves the market a little bit is the global diversity. So I think that might develop a little bit more next year.
Excellent. Wonderful way to kind of end our discussion, because I'm very conscious of time. So I want to say a huge thank you to the panel, to Wendy, Daniel, Claire. Thank you so much for the discussion. I think if I could summarize one thing to take away, maybe Wendy's point of don't panic. hold strong. There are loads of other panics that aren't just tariffs at the moment, and focus on those. I think that shines through brightly. And for anybody that would like to revisit the conversation or share it with colleagues, the session has been recorded. It will be on demand tomorrow. We'll send that out. And if you haven't already, please do download the full report. It's available on the Art Basel UBS website, which is the artmarket.artbasel.com. And if you'd like to discuss how maybe we could support you through the next 12 months, please do get in touch with our team at ArtLogic. We'd be very happy to help and guide some conversations about how we can support. Once again, thank you so much to everybody joining. Thank you to the panel. It's been a wonderful discussion, and hopefully see you in a next episode of our In Conversation series coming up. Thank you so much.
Thank you.
Thank you.